Hey folks, Jeremy Whaley here from Trade Maestro. Hope you're doing fantastic today. And I've got a video that I think could really set your trading onto a better course, but it's a little different than most of my videos. This is more of a trading psychology video. Now, normally people don't like to talk about trading psychology because people's idea of trading psychology is, well, their idea of a psychologist is that they go into a room and they put their feet up on a couch and they tell all their deepest, darkest secrets, and they got to dig into their childhood and find the trauma and all that kind of stuff. That's not what we're dealing with here. What we're dealing with is the healthy mindset of a healthy trader who knows how to get into the market and keep a balanced mindset while they're involved in the market. So very important topic. It's one of the big things that separates professionals from amateurs. And I'm going to share some really interesting stuff with you in this video on the other side of the disclaimer. So let's watch the disclaimer and I'll see you on the other side. Let's go. Hello everybody, it's Jeremy Whaley here from Trade Maestro, and I'm excited to share this particular session with you because I know for many of you, based on my coaching calls and just one-on-one interaction, this is a topic that a lot of you struggle with. I've called this session Trade the Chart, Not the Profit. Trade the chart, not the profit. And the reason I called it that is because that's what I want you to get away from this. That is kind of the mantra or the idea that you need. You need to trade the chart, not the profit. But what our minds do inadvertently is we have this idea that we're looking at the profit. We're all excited when there's big profits going up. Then we get frustrated when there's not profits going up. And before we know it, we're focused on the wrong thing. So there's a couple ways that this can manifest in our trades. And I'm going to kind of try to walk through those with you here. The first one is in setting up your risk and reward ratio. Okay, so if you've watched my other videos on risk management, you know that I teach you that you need to set up a 2-to-1 reward to risk ratio, at least a 2-to-1. Ideally, it's 3-to-1 or better, but a minimum of a 2-to-1 reward to risk ratio for every trade that you get into. So what that means is it means that if you're taking a trade, you're looking to make at least $2 for every $1 you're putting at risk. Now, intellectually, that sounds great. When we go to the chart, sometimes that doesn't sound so great because you go in and you start setting your trade up and you're like, uh-oh, in order for this to be the right risk reward, I have to take some risk off the table. And before you know it, it turns into a bad trade. So let me show you what I'm talking about. We'll get over here to some charts. I think we will. There we go. Let's get over here to some charts. What you're looking at on this screen is a trade that I do want to talk about in a moment, but we'll come back to that one. Let's look at, let's just look at Bitcoin. We'll just pull Bitcoin up here. This was a trade that just recently hit our targets. So let's actually look up a different trade here. Here, this is a perfect trade. Let's say that you're looking at this Ethereum trade. We'll scoot it over here for now. And you come in here and you set up your trade setup and you put your entry price in here. And let's say you're going to take an entry if the price gets up to or above 1913, and let's say that you're taking this up to our other target, which is 2114. And let's say that you come in here and you want to put your stop below your support level. So you do it right there. Okay, so in case you're not tracking with all the words that I just said, what I've done is I've put my entry price right here above all my congestion. Okay, that's my entry, and I'm going to enter the trade here. I've set my target up here at a previous swing high, okay, and then I've put my stop down here below a major pivot point. Doesn't matter why that line's there, just trust me for a little bit here. There was reasons that we drew that line in there, okay? Now, this is the way that we would typically set up a trade, but if you look at this and you hover over the risk-reward trade setup, you might notice that it shows, and if I activate my pin, it won't do it. So just look right there where my pointer is. It shows that your risk-reward is $1.53. So that means that we are going to make $1.53 for every $1 that we're putting at risk. Okay? Now, in and of itself, that's not terrible, but it's a little bit short of the minimum 2-to-1 reward to risk ratio. And frankly, it's really not worth taking the trade for $1.53. So here's what a lot of people will do on a trade setup like this. What a lot of people will do is they'll come in here and they'll move the stop up, and they'll say, okay, I need it to be a 3-to-1. Well, right there is 3-to-1. So there we go. Okay, I got a 3-to-1 trade set up. Well, here's the problem with that. This stop is right in the middle of all the congestion. So what we did is we created a stop that is appropriate for our mindset. It's appropriate for our profit, but it's not appropriate to the chart. You understand? And so what I want to encourage you with here and really show you, you got to set the stop to where the chart needs it. Okay. And the way that I teach you to set these stops is we're going to set this stop below. Oops, I moved the whole thing there. We're going to set the stop below either a swing low or a pivot area. Okay. So the purple line's a pivot. So we'll go below that pivot. Now suddenly your risk reward ratio got thrown off. If we come up below the swing low point, then at least you get over a 2-to-1, and you may end up choosing to use that as your stop point, but you still get the idea. You cannot set the trade up based on what risk you're willing to take. You have to set the trade up based on the risk that the chart tells you, and then turn around and say, is that a risk I'm willing to take? Because listen, I don't care how strong-willed you are. The market doesn't care what you think. It doesn't care one bit what you think. And so you've got to set it up based on what the market's presenting to you. You have to move with the market. You will never get the market to do what you want it to do. Okay. So that's the first thing. Let me kind of recap here in terms of trade the chart, not the profit. The first place that can present is in setting your trade setup itself, where you'll be prone to tighten your stop to where you're not actually giving it enough wiggle room. And that brings up the other chart that I wanted to show you. I wanted to show you this chart over here on NVIDIA, where we got into this trade pretty early on, and then it moved down, but it never hit our stop, and then it started moving, and it's moved big here, okay? This is very, very typical. This is why, and I just can't emphasize this enough, this is exactly why you have to trade the chart, not your profit. If you squeeze this in the way that you would want to do it, and I say you, I'm just using that generically, the way that we typically as a human being would want to do it, we would tighten it up there and we wouldn't have any real risk on the table, and we would just let it run because that's what we think it should do. We think it should just, trigger the trade and go straight to our target. That's not the real world. In the real world, what you see is what we see here, where it'll trigger a trade, it'll come back down, it'll fizzle and fazzle in here, and then it'll come up and it'll come back down, and eventually it'll get to your target. That's the way that trade cycles work. So I know that, you probably know that, but in the moment of the trade, what happens is it's really easy to forget that. And what we're thinking as a trader is we're thinking, we're going to trigger the trade and it's going to go straight to my target and I'll be there in 3 days and I'll be cashing out. Very rarely is that how it works, okay? Trades zig and zag. And so this is a really good example here. This example on NVIDIA is a really good example of why we have that entry price, why we have that stop down here. We want to give it room to wiggle, to go profitable, to come negative, come profitable, and eventually get to our target. And failure to do that will ultimately end up in you stopping out of your trades. It's a big pervasive problem that I've dealt with a lot of my coaching clients where they're stopping out of their trades early because, or let me say it differently, they stop out of their trades and then the trade does what they want it to do. That's the symptom. The cause of that is we set stops too tight, and the overarching of that is we're looking at things that make us feel comfortable as opposed to what the chart really, really needs. So back to the main theme, trade the chart, not the profit. Trade the chart, not the profit. Another place that this shows up, again, on this NVIDIA chart, we can see this. Another place this shows up is mid-trade. Here's what will happen. And this one is not pervasive, but it will happen. It's kind of similar. You see how you started this trade, it was profitable, and then it turned negative. And about right here, it's looking really, really scary. And everything in your trading psychology is wanting to get out because you went from maybe plus $200. And I don't know if that's the number or not. I made that up. But you went from like maybe plus a couple $100 down to negative $600 or $700. And you're looking at that and you're freaking out. You're like, man, I was positive $200. Now it's negative $600. And everything in you wants to close the trade because you're looking at the loss. Come back to the main theme. Trade the chart, not the profit. We haven't reversed. That trade in this particular chart is sitting there right there in your pivot point, sitting there right there in your support. It's building support, building support. Let it run, folks. Sometimes you'll be profitable for a little while and it turns against you. Sometimes you'll be negative for a little while and then it finally moves. This is just part of the ebb and flow of the market. So trade the chart, not the profit. If all you do is look at the profit instead of what the chart's telling you, you're going to have negative results. All right, here's another example where this shows up and another kind of angle that I want to bring to your awareness on this. And that is when you choose to take your profits. You know, what a lot of times will happen is people will get into a trade. The trade is profitable for the first time in their life. Maybe they're seeing a profitable trade and maybe it's $200, $400, $600 to the profit. They're like, man, I got $500, $600. I'm going to take my money and I'm going to run. And they never step out to realize I'm only a third of the way to my target. I got $1,200 more dollars sitting here. Or I got another $1,800 sitting here if I would just be patient and ride the trade. Once again, trade the chart, not the profit. Let me see if I can find an example of one of those. I know we've just had a couple here. We've had so many of these recently. Actually, here's a really good example. Bring this one over. This is on Caterpillar. This is a trade where we got into the trade back here. Our stop's way down here. We trade pretty profitable. We actually hit one of our first targets. You don't see it here, but it was in our Sunday night class. Pulled back to our entry point. This was our original entry point, and now it's running again. Okay, so a lot of people would look at this and they would have freaked out like right here, and they get out of that trade because all they're looking at is the profit, and they're missing the part that the chart hasn't reversed. There's no reversal in that trade. Okay, let me find a couple more that we've worked on here. Let's see, where's the Lulu trade? This one. Well, it doesn't really show the ebb and flow so much, but this is actually what every trader wants. This was a trade we did on Lulu where we entered the trade here and we went straight to the target and boom, we're out. I mean, that was just boom, boom. So that's what every trader wants. That's not normally what happens. Here's a great example on Netflix. Netflix, we've had several trade setups on this along the way, starting all the way back mid-April. When we started getting into this trade around 335, okay? So every one of these surges that you see and little pullbacks, these were new entry opportunities. But what will happen a lot of times is people will have this surge and then they take their profit and they miss the rest of the move. You can see right here, going all the way back to mid-April, we targeted this exact price range where we are right now. We targeted this back in April, 451. Okay, we targeted this way back in April, and we've had a nice ebb and flow all the way through. But this is your typical trend. Look at how it happened. We break out, we pull back, we break out, we pull back, we break out, we move sideways for a little bit, break out, pull back, and it's trying really hard to get all the way. We're within pennies of that target before it pulled back. But you notice it's moving from pivot to pivot because that's the way stocks work, okay? So why am I making such a big deal about this? This is the typical trade where people will go a third of the way to the target. They'll take all their profit because the first time in their life they've had a $500 or $600 profit, and they miss the bulk of the trade. They get that first little bit, and they're so excited to take it. But guess what they don't protect? They don't protect on the downside. So thinking about trading the chart, not the profit, what traders will tend to do, especially amateur traders or individuals, they'll tend to be very short-sighted on how fast they take their profits, but they're very slow on how quick they'll cut their losses. Notice on this trade setup here on Netflix how small our stop loss was. This is where our stop loss was, way down here, okay? Now, we never got there, so we never had to take the loss. But what a lot of traders will do is exactly that right there that I just described. They'll get up here, they'll take their profit, and they ended up with like a 1-to-1 risk reward. In the real world, what they'll do is when that thing turns around, they won't sell it. They'll let it go down 3, 4, 5 times what they planned on risking, and then they end up wondering why they just lost so much money. Trade the chart, not the profit. When you've got a trade set up and you know to trust your trade setups, see it through to the end. Yeah, you can take some profits along the way, but don't close the whole thing. If you're trading stock, then the best thing to do is when you get to your first target, take 50% of your position off at your first target. Of the remaining half that you have, take the next 50% off at your second target, and then close the rest of it at your third target if you have 3 targets on the trade. In terms of your stops, if you get down to your stop, get out of the trade. Just get out of the trade, live to trade another day, protect your capital. This was your trading plan to get into the trade, okay? Thinking about taking profits at targets. If you're an options trader, if you're trading the options and you get to the different targets, well, your first target, you can roll the option. You can take your profit for that option and you roll it forward. And you get to your second target and do the same thing. And so if you don't have enough options to close half, then you can just roll the options, roll out your profit, roll up the strike price, and you keep moving it forward. So it's just a basic principle of money management, but it's a principle that I see amateurs messing up all the time. And the reason is because it's our human psychology. Our human psychology does not want to agree that we took a loss. And so we'll set stops too big, or we'll set them too tight, and then we don't have room to maneuver. We'll set them too big. We don't honor the stops. We think, well, it'll come back, and then it never comes back. We do that because we want to try to avoid the pain. But then when we have a gain and we have a profit, we're very, very quick to take those profits, and we don't want to let them run. So that's why I say trade the chart, not the profit. If you will trade the chart, not the profit, you will be happier for it. Have you learned something in this video? Have you learned something? If you have, like and subscribe, because I got some more that I'm going to share with you. But if you're not subscribed, then you may not get the alert. Or, of course, if you would like, why don't you just head on over to trademaestro.com and to get signed up for one of our free courses or something over there so you can get on our mailing list, and then you'll get email notifications, not for every video. I'm trying to do a whole lot more social videos right now, so I'm not going to email for every one of them. If you really want every social video, like and subscribe right here, wherever it is that you're watching. But if you want the email notifications, go over to trademaestro.com, get yourself signed up. And if you're ready, sign up for membership so we can mentor you and help take you on your trading journey. Or if you're really ready to jump in, what I'd love to have you do is go through our accelerator course, which is our 3-month program. It's about 25 modules and 24 modules. And it's going to help take you through the entire journey of everything that you need to get started and maximize your trading. So you can find all that over at trademaestro.com. Thanks for watching. I hope you've gotten a lot out of it. And until next time, happy trading. We'll talk to you soon.